Hello, welcome to another video on this channel. We've been pumping out videos. Um, Today we're gonna discuss um why I don't believe that that everything is overvalued in the market. I don't believe that, and even though this channel is called the Red Candlestick, I do not believe that everything is overvalued in the market. And that's what we're going to go over today. I'm not going to go, into some deep value stuff because, that stuff I'm saving for myself and not for you guys because I'm greedy, just like everyone else. That's probably why you should trust me because, I'm not lying. Um, Here we have, you know, we have the S&P ETF actually has outperformed the S&P. Wow, that's actually pretty interesting, and that's with fees. So these fees are so minimal that they actually outperform just the index. So, and what you see here, the blue line is S&P for value. This is like weighted for value. And if we can see 2007 and 8 value is sparking off, probably because of the tech bubble, but then boom, down. Now, you might ask, so if value is so good, why is value underperforming? And the reason why value is underperforming is because value only performs well when things are bad. Truly. I mean, look at this. Even down here, value only performs well when things are bad. Now, being a value investor, there's actually no real difference between growth and value. That's one thing I want people to understand, is that there's no difference. The term growth is just used that I will pay any price if the company is growing at some ridiculous rate. But there's no real difference so obviously none of these value ETFs can really display value, but it does give you an idea that value is underperforming. And here's where the idea that there's still places that are pretty good for investing. If we see here, we can see the countries, U.S. listed stocks only, and we can see that like Monaco is down here. I don't know why Monaco. Actually, I don't know any companies from Monaco. So, but Brazil, South Korea, South Africa, Spain, Japan, Colombia. These are all very, very cheap countries to invest in. And there's many companies from those countries on the US stock exchange, even more on like the London stock exchange. So if we go here, this is this is an example, company from Brazil trading very, very cheap. I want everybody to understand that the best place to find value that actually is growing, is to look foreign, or just look outside the normal realm. Like, look at things that people are not looking at. And now foreign is probably much better because you have to understand that there's different situations in different countries. There's different issues in different countries. So, obviously, there's a lot of things you might need to understand, but I feel like people, they over-exaggerate these risks. The risks are far less than the rewards of much of these countries outside the U.S. as we can see, their revenue has gone up. But you have to understand that their revenue is in Brazilian real. Yeah, is that right? It's Brazilian real. Yeah, I think Brazilian real sounds about right. So, even though they're trading at a 3.88 PE, and let's see here. Well, they're trading twice their book, but even though they're trading at 4 times earnings, you have to understand, first off, iron prices are high. They actually been dropping off, which is good for actually people. That's why a few videos ago I said, like, bubbles are bad for people. Bubbles aren't good. Like, bubbles make things more expensive. Like, you don't want bubbles, and bubbles are caused by poor monetary policy. And bubbles are also caused naturally because humans will always create bubbles because that's how humans are. You know, it's not bad because usually bubbles actually teach people lessons and people actually become better from it. So, they're not always a bad thing, but, you know, you gotta be careful with bubbles because bubbles can hurt a lot, especially when they pop. Here's another company, Alibaba. This actually is a company in my watch list. But I watch a lot of different companies. This is probably, you know, this company, I feel like it's too talked about in the value investing world. It has gone up a lot in their revenue. Now, Chinese yuan are much better than Brazilian reals. Much more stable currency, low inflation. Actually been appreciating against the USD, the US dollar, you know. And this stock just you know, down. Like, there's no, like, they have not gone up. Also, twice book. Now twice book, even though twice book does not sound that insane to me, but, like, twice book is actually pretty good for a tech company, even though it's, you know, I've seen much lower. Because I have, you know, I probably look at the stock market a little bit too much, so, actually, you know, 17 times earnings, growing their revenue like crazy. Obviously some issues with China you have to understand. More with China than Brazil, because, you know, we don't have the best relationship with China, especially after COVID. So, delisting risks, all of that. But I would not, you know, ignore China. LG Display. So, you know, the company LG that produces all that, the, you know, TVs, phones, that stuff. This company out of Japan, actually the revenue has been declining. Now Japan has some issues too, but they're different issues. I don't really consider them that bad, honestly. Now, they have a PE of 5, pretty good for, well, but they have, you know, not the best revenue, so it's kind of expected. Now, part of the reason why Japan has performed pretty badly is because they have, you know, they have a deflationary currency. The currency slowly goes up in value in there, but foreignly is going down in value because of their debt levels. So, weird situation in Japan, you know, makes their profit margins thinner, makes revenue go down. It's pretty depressing after a while. Actually, this is half book value. This, honestly, is a better stock. Actually, let's look at Korean Electric Power, because this is another stock that I have looked at. Surprised it's on my watch list. Up, down, up, down. Now, Korea also has a similar issue to Japan. Honestly, both of these issues are caused by just extremely low reproduction rates in these countries. Man, like, I really don't get why, you know, it's just such a slow rate of reproduction. This company is extremely volatile. I have to say. But they're like a fifth of their book value. Honestly, let's look up Korean Electric Power Stock Wall Street Journal. Let's go to their income statement. What is their cash flow? Cash flow. Cash flow. Net operating cash flow. 13. Is that million? Okay. Korean to USD. So they're trading 1 times free cash flow. Holy shit. Well, I mean, wow, that's insane. But, you know, obviously, I'm not going to show you smaller companies because I don't want to get... But obviously, none of this is financial advice. You know, do your own research. But, you know, you should look at these things. All I'm trying to say is that, whatever Western country you live in, or if you don't live in a Western country, your country might not actually be the best. And, investing. Obviously, have your national pride, all of that, but, like, when it comes to investing, you have to have a very logical brain. Like this, you have to think of this stuff logically. Like, Japan. Japan is very cheap. Also, South Korea is very cheap. And, even if these countries are having, deflationary pressures, and Japan has a very high debt ratio. Spain is also a one that I look at. Actually, Telefonica. Yeah, that's another one. 20, but this is a company that I don't exactly like too much. But, you should look at these things because they're interesting. Telefonica, not the best, company. Yeah, but, I watch this company out sometimes because, I just wonder if they can turn around their business. I have no clue why this happened. Usually I, remove any, irregularities, but, so yeah, I wouldn't say this 2PE is accurate at all. Irregularities, not good. But, that's, that's about it. Well, pretty interesting stuff, and, I'll see you in another video, which will be tomorrow.